Happy Tuesday out there, Team 42. It's your skipper here, Darius Delta, present our macro minute for Tuesday, October 22nd, 2024. As always, we'll start with the executive summary from today's lead-off morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is, will the Trump trade derail the stock market? Our answers are, in our view, the most important drivers of the backup in bond yields since the Fed cut rates have been the resiliency of the U.S. economy and stickiness of inflation, two fundamental research themes we've maintained for over 2 years. Eventually, markets will pay for the third massive hole Mr. Trump is likely to permanently blow in the U.S. budget deficit via rising global bond market volatility, plus a stronger U.S. dollar equating to declining global liquidity. We do not, however, believe those bearish dynamics are likely to trend until the second quarter of next year at the earliest. We were lonely in calling for S&P 500 6,000 and all-time highs in Bitcoin back at the lows in August, when we explicitly warned you to avoid shorting that bear trap. We are not so lonely anymore as the Perma-Bear newsletter writers get forced to join our near two-year-old bull party. No sweat for them anyway, as they've made millions selling incremental subscriptions while their clients' retirements were severely delayed because of their research. Yikes. Transitioning to our 42 macro dashboard. As always, we'll wrap up with a question from our community. This one's regarding asset seizure. I'm back on my man of leisure commentary. Asset seizure says, "Hi, Darius. I was hesitant to ask this question as I didn't want to seem like coming across as a conspiracy theorist or like reading too much zero head. Totally fine. It's okay to be. We welcome conspiracy theorists too in our community. We're trying to make everyone retire on time and comfortably, including conspiracy theorists who probably need our help more than anybody. However, there have been two papers published recently, one from the ECB and one from the Minneapolis Fed, coming out strongly against Bitcoin. The timing of both these releases is a bit suspect, i.e., within 2 days of each other. The latter suggesting taxation or legal prohibition of Bitcoin. Should we consider that governments, given fiscal situation and foreturning, could look to asset seizures, confiscation, bail-ins as a way to protect the financial system and/or the public? What good is saving for the future when assets can be taken away? Not asking for your advice or what to do, but how to think about it. Happy for you to tell me I'm being paranoid as well. Thanks. I don't think you're being paranoid at all. In fact, the other client who replied to this question was going to say what I was going to say as well, which is you go back in the history of these sort of crises, we always see burden sharing amongst not only the sort of the lower classes of people, lower income people, and sort of upper income folks. Asset seizures are real things, and we've seen that before. Our friend Lou Groman over at sort of Forest for the Trees. What's the name of his firm? Forest for the Trees. Lou Groman is over, his view on the treasury markets in this context over the next 10, 12 years is that these securities are going to become certificates of confiscation. Again, we've been talking about this for since August of last year, when we introduced our fourth turning analysis. We've been saying, hey, look, you're going to get financially repressed. There's going to be monetary debasement because there's going to be so much growth in public sector debt here in the U.S., well beyond current CBO and OMB projections. Those are way too low in our opinion. There's going to be so much growth in public sector debt that there's only going to be two institutions in the world that can really afford to capitalize this. And it's going to be the Federal Reserve's balance sheet, and they're going to use commercial banks' balance sheets to financially repress us into the treasury market as well. And we're also going to have a decent amount of inflation as well. So those are all sort of some of the key conclusions from our investing during a fourth turning analysis, which has been live, and we continue to add to in each and every macro scouting report since August of last year. So with that in mind, kind of going back to the question. So should we consider, asset seizures, confiscations, bail-ins as a way to protect the financial system, i.e. protecting the treasury market, which is sacrosanct in the financial system, as legitimate risks? Yes, absolutely. Do not, I mince no words about this. If we have a big enough fourth turning crisis, they will come and take our money. There's no question about it. So it is what it is. What is a good saving? What good is saving for the future when assets can be taken away? We still want to have money to take away. I mean, I still think it's more important to have money that can be taken away as opposed to no money at all. I mean, look, I've been poor, been very poor, been extremely poor. I've been as poor as anybody you've ever met listening to me. Homeless several times throughout my life. it's way better to be rich than poor. I can assure you of that. So it's better to have assets that can be taken away than no assets at all. So I'll tell you that. So, and even in, they're probably not going to take 100% of your assets. So, 100% minus some percentage that's less than 100, you still wind up with more money than it is from someone who's fooling around and not taking this stuff seriously in terms of the financial repression and monetary debasement that we believe is going to accelerate dramatically as we get deeper and deeper into this fourth turning crisis. So that's kind of our general takeaway on this. Again, doesn't mean you have to be ragingly long assets at all the times. Again, even though we're frogs being boiled alive in a pot of monetary debasement and financial repression, does not mean markets go up in a straight line. We're likely to experience secular bull markets in financial assets, real assets, gold, Bitcoin, all those types of things, but it doesn't necessarily mean they're going to go straight up in a straight line. You're going to have significant drawdowns throughout that process, especially when the Federal Reserve and or other central banks globally are putting the screws to monetary policy on a transitory basis in order to maintain credibility, so they don't let inflation expectations run away from them. They have a very delicate, fine tightrope exercise ahead of them for the duration of this fourth turning. On one hand, they have to monetary debase and financially repress us in order to save the treasury market. But if they do too much monetary debasement and financial repression, you're going to have rampant inflation in consumer prices, which ultimately cause problems in the treasury market. So, I mean, imagine the Fed like on a tightrope with that long pole, walking from one tall building across the street to the next tall building. I mean, that's essentially what they have to do for the duration of this fourth turning. And there'll be times where for lack of a better word, it's pretty dark, but there'll be times where they fall off and splatter on the concrete. And then they'll have to start the game over with some gigantic, QE program or alphabet soup of incremental, sort of monetary policy facilities in order to get themselves back on that tightrope with the pole. And then at some point, they'll walk forward several quarters or a couple of years, and then they'll fall back and they'll splatter on the ground again, and they'll have to use the balance sheet and alphabet soup to get back on the rope. And ultimately, we'll get ourselves across the street with that tightrope exercise. But again, it's not going to be a straight line. There's going to be several times throughout the duration of this fourth turning where they slip and fall to the ground and splatter. So need to be aware of that. If you don't have, sophisticated risk management systems to A, keep you invested when we are in the bull market phases of this journey, and B, to get you to sell, at or near the top when we're heading into some problems. If you don't have that in your back pocket as an investor, if you're not partnering with somebody that can deliver those types of solutions to you, then God bless you. Because I really do think this could get hairy from a financial market volatility standpoint. Again, up and to the right is where the price is going, but it could be up and to the right with some very significant drawdowns along the way, and that could really severely impair your retirement or your client's retirement. So investors need to be aware of that. So we'll wrap it up there. Darius Dell presenting our macro minute for Tuesday, October 22nd, 2024. Everyone have a wonderful day out there. Best of luck. We'll catch you back in tomorrow. Cheers.